GBP JPY fell sharply after a cautious Bank of England hold met renewed yen intervention warnings. The pair moved because rate differential confidence weakened at the same time traders had to price sudden yen support risk. GBP JPY declines is the hook because the confirmed event creates a specific pressure point. The BoE held its benchmark rate at 5.25%, while Japanese officials warned against speculative one-sided currency moves. The measurable anchor is 187.8 level, and the story turns on carry trade rather than broad hype. Instead of treating the headline as a market mood swing, this segment follows the mechanism that makes the change matter and the next signal that can prove whether the story is moving forward. The confirmed baseline is this. The move from 188.5 to 187.8 reflected traders reassessing sterling carry exposure against a stronger yen backdrop. That detail gives viewers the frame for the rest of the story. It shows what is already known, which actors or assets are involved, and why the event is not just a random market headline. For this story, GBP JPY and yen sit inside a process where intervention risk can change the readout. The baseline also defines the boundary. 187.8 level is usable evidence, while anything beyond intervention risk still needs follow-through. The important part is to keep the evidence tight before moving into what the change actually does. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is where GBP JPY declines becomes useful. Carry trades borrow lower-yielding yen to buy higher-yielding currencies. When the yen strengthens, those trades can unwind quickly. In plain English, the event matters because it changes the way access, risk, settlement, liquidity, governance, or infrastructure works. In this case, the stress point is rate spread, which is why 187.8 level is a signal rather than decoration. That is why this segment spends time on rate spread before discussing impact. Without that mechanism, the event is easy to misread. The headline may grab attention, but the mechanism explains why traders, builders, users, or institutions have to care about the next step. The impact lands with a specific group, not with crypto as a whole. FX traders, macro funds, and crypto risk desks care because carry unwinds can tighten liquidity across higher beta markets. That is the practical consequence. It may affect how users move funds, how institutions manage compliance, how traders price liquidity, how developers build, or how risk desks read the market. The affected side is tied to yen and GBP JPY, so the scope stays limited to what the supplied facts support. That narrower read is more useful than a sweeping market claim. The open question is just as important as the confirmed fact. It is not confirmed whether Japan conducted stealth intervention, so the confirmed piece is verbal pressure and yen strength. That means the story should not be read as a guaranteed outcome. The proof standard is simple. The next signal is whether GBP JPY holds nearby support and whether Japanese officials escalate from warnings to visible action. Until that signal appears, the confirmed development and the unresolved part should stay separate. A stronger claim would need GBP JPY or relevant market participants to show follow-through around intervention risk, not only reaction around yen. That prevents a useful news signal from turning into speculation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal for GBP JPY declines is concrete. The next signal is whether GBP JPY holds nearby support and whether Japanese officials escalate from warnings to visible action. If that signal appears, the story has new evidence. If it does not, the headline may remain smaller than the early reaction suggests. A clean follow-through would connect 187.8 level to visible action, usage, compliance, liquidity, or technical progress. For viewers, the usable close is not a direction call. It is a checklist tied to 187.8 level, carry trade, and the specific trigger above. The final readout is practical. Track the next verifiable step, not the loudest claim around the asset, rule, protocol, or market move.